Welcome back to Marketing Your Niche. If you've been following the mini-series, you know we've covered everything from finding your niche to monetize it, overcoming barriers, and actually launching your online business. Now, let's talk about something that can make or break your success. Getting your financial and legal foundation right. And before you think, this sounds complicated, trust me, I'm going to break it down in a way that is easy to understand so you feel confident about taking the next steps. Let's get started. Having been a teacher, I love guiding my students to enhance their skills, explore their passions, and unleash their creativity. Little did I know, I was actually helping them to lay the groundwork for their own unique paths. That's why I launched this podcast, to assist you in doing the same. Marketing Your Niche, it's all about discovering your niche, taking action before you are ready, focusing on consistent progress, and move ahead to building a profitable online business, even if you are not sure you are doing it right. Tune in for practical advice, actionable marketing tips, and strategies to build a business that brings you more freedom, more profit, even more joy. Let's get started. Let's start with something crucial, your business structure. If you are just starting out in North America, you might be wondering, do I really need to register my business? Or should I go with a sole proprietorship or incorporate? The answer depends on your goals. If you are testing the waters, a sole proprietorship is the easiest and fastest way to start. It's just you, your business, and your earnings. But here is the catch. You are personally responsible for any liabilities. If someone sues your business, they are coming after your personal assets too. Now, let's say you are serious about scaling your business or you want to minimize personal risk. That's where incorporating comes in. When you register as a corporation, your business becomes its own legal entity separated from you. That means if something goes wrong, your personal assets are protected. Plus, corporations often have better tax benefits like lower tax rates and more deductible expenses. The best part, if you plan to work with larger companies or government contracts, they usually prefer dealing with incorporated businesses. One of my friends, Maria, moved to Canada 3 years ago and started a social media management business as a sole proprietor. She was making good money, but when a client didn't pay her for months, she had no legal protection. She ended up incorporating, which not only made her business look more professional, but also gave her the ability to apply for small business grants and funding. That one decision changed everything. What am I saying? Choosing between being a sole proprietor and incorporating your business is a big decision, and both options come with significant benefits. As a sole proprietor, you have complete control over your business, making it the simplest and most cost-effective way to start. You report income on your personal tax return, and there are fewer regulations to follow. This is ideal if you are just getting started, testing a business idea, or running a small, low-risk operation. On the other hand, incorporating offers protection for separating your personal assets from business liabilities, which means your personal finances are not at risk if something goes wrong. It also opens doors to more tax benefits, such as income splitting and tax deferrals, and makes it easier to raise capital or apply for business loans. If you plan to scale your business or bring on investors, incorporating might be the better long-term strategy for you. The key is understanding your goals. If you are looking for flexibility and simplicity, sole proprietorship works well. But if you want security, credibility, and financial advantages, incorporation is worth considering. Speaking of money, let's talk about taxes. One of the biggest mistakes new business owners make is treating their business income like personal income. Please don't do this. The moment you start earning from your business, open a separate bank account. Keep track of every expense like subscriptions, software, advertising, even your home office space, because this could be all tax deductible. Taxes play a crucial role in your financial planning, whether you are a sole proprietor or running an incorporated business. As a sole proprietor, your business income is treated as personal income, meaning you report all your earnings on your personal tax return. While this simplifies the process, it also means you are taxed at your personal income tax rate, which can be high if your earnings grow. However, sole proprietors can still benefit from deductions such as home office expenses, internet and phone bills, business supplies, and even a portion of travel costs if they are business related. Incorporating your business, on the other hand, can provide significant tax advantages. One of the biggest benefits is the lower corporate tax rate, which is often lower than personal tax rates, allowing you to save money if you keep profits inside the company. Additionally, incorporation offers income splitting, meaning you can pay yourself and possibly family members a salary or dividends to distribute income in a tax efficient way. Another advantage is tax deferral. Rather than withdrawing all profits and paying personal tax immediately, you can leave money in the company, allowing it to grow at a lower tax rate until you decide to take it out. Many government grants and business tax credit are also only available to incorporated businesses, make it easier to reinvest in your growth. While incorporating requires more paperwork, legal fees, and also ongoing compliance, the tax saving and financial flexibility can make it worthwhile for businesses looking to scale. Understanding how taxes impact your business structure can help you make an informed decision that maximizes your earnings and minimizing liabilities. Government grants and funding are also available for small business owners, especially for newcomers and also women entrepreneurs. But here is the thing. Many business owners don't even apply because they assume they won't qualify. Let me tell you something. There are programs designed to help new business owners like you get financial support. You just need to do a little research and apply. Another key factor in financial stability is your credit score. Many people don't realize that having good personal credit can open doors for your business. Need a loan to scale? Banks will check your credit, that is for sure. Want a business credit card? Your personal credit score still matters, especially when you are just starting out. Start building your credit by making small purchases on the credit card and paying them off in full each month. This isn't just about numbers, it's about financial freedom and flexibility in your business. Your credit score is one of the most powerful financial tools you have. You have to understand that, as it plays a huge role in your ability to grow your business. Whether you are applying for a business loan, leasing office space, or even getting a business credit card, lenders and financial institutions will look at your credit score to determine if you are a trustworthy borrower. A higher score means better interest rates, access to more credit, and overall financial stability, while a lower score can limit your options or make borrowing money more expensive for you. For example, let's say you are starting a consulting business and need to invest in a new laptop, software, and marketing. With a strong credit score, you could qualify for a low interest business credit card or a small business loan, allowing you to finance these purchases in a more affordable way. On the other hand, if you have a low score, you might be offered a high interest loan or be required to put down a large deposit for business services. Another example, if you plan to rent a commercial space, landlords often check credit history before approving lease agreements. A poor credit score, on the other hand, could lead to rejection or require a personal guarantor. Building and maintaining good credit starts with making payments on time, keeping your credit utilization low, ideally below 30% of your available credit, and avoiding too many credit inquiries in a short period of time. If you are new to Canada or United States or building your credit, start with a secure credit card where you deposit money upfront as collateral. Over time, responsible use will help boost your score, opening up better financial opportunities for your business and personal life. Banking is another thing you need to get right. A lot of entrepreneurs make the mistake of running their business finances through their personal account, which can be a nightmare when the tax season rolls around. Setting up a business bank account is simple, and it makes managing your finances a lot easier. Plus, it keeps you looking professional when dealing with clients. Let's talk about financial habits that will set you up for success. If there is one thing I wish every entrepreneur will do from day one, is setting aside money for taxes. A good rule of thumb is to save at least 25 to 30% of your income for tax time. You don't want to be shocked when tax season arrives. Set up a system where a percentage of your earnings automatically goes into a separate saving account just for taxes. Now, you might be wondering, do I need an accountant? My answer, probably yes. When you are just starting out, you might be okay with basic bookkeeping software, but as your business grows, having an accountant can save you money and help you make smarter financial decisions. If you haven't already, go back and listen to my previous episodes in this series. Episode 1 helps you discover your niche. Episode 2 teaches you how to validate your idea. Episode 3 walks you through choosing a business model. And episode 4 shows you how to monetize your niche. Furthermore, episode 5 helps you overcome common barriers like language and networking. Episode 6 was all about actually launching your business and getting your first clients. Each of these episodes builds on the next, so if you are just jumping in now, you will want to catch up. So let me ask you, have you set up your business finances the right way? Are you thinking about incorporating, or do you have questions about taxes and funding? Drop a comment below or send me a message. I would love to hear where you are at and help you navigate this journey. If you found this episode valuable, make sure to subscribe so you don't miss what's next. In the next episode, we are diving into branding and standing out in a crowded market. How to position yourself so clients and customers choose you over the competition. So you don't want to miss it. Until next time, keep learning, keep taking action, and keep building the business that works for you. See you next time.